Stellar is exploding. The price went up 24% in the last 7 days. Now, does it make sense to jump on this rally? What does the long term say? How is Stellar long term developing versus Bitcoin, for example? Is there maybe a quantitative approach to time Stellar, to ride those waves, so to speak, to get on the trend early enough, but also to exit when the price tends to decline? We're going to look at all of this in this video, and we start off the video with the XLM price divided by the Bitcoin price. In other words, how is Stellar doing long-term relative to Bitcoin? That's this chart over here, and it is long-term. It starts in 2014. Since August of 2014, Stellar unfortunately underperformed Bitcoin by roughly 60%. But there are massive rallies. If you bought it in February of 2017 and then sold it perfectly in January of 2018, you would have made a gain of almost 4,000%. So a 40x, had you put in 25,000 US dollars, you would be a millionaire just by riding this single wave. But of course, nobody can time this perfectly. But it is interesting how we get these massive waves in Stellar. And it's also interesting to put this current rally into perspective. It actually doesn't look that big, right? Relative to Bitcoin, in the last few years, we rather tend to see an underperformance, and sometimes we get these massive rallies, right? This chart now starts in 2018. But is there maybe a way to time this? Is there maybe a way to time the US dollar waves? Because even though the chart measured against Bitcoin doesn't look that pretty, measured in US dollars, we still have interesting waves. We still had this 2000% move, for example, March of 2020 to May of 2021. So one way to look at this is to use moving averages. So we can press / in TradingView and enter moving average, simple, and then we get this added to the chart. It's barely visible. It's this blue line here. So let's make this a bit more visible in white and thick. And then let's also increase the duration. This is now 9 days. Let's maybe put this to 100. This is now the 100-day simple moving average. Now what could we do here? We could buy in whenever the price is above the moving average. We could be selling whenever the price is below. In other words, we don't want to be in Stellar whenever it tends to go down. Now the question is, what's the best duration here? Because maybe the 100-day isn't that good. Sometimes we just break above in order to go below again. So we buy high and sell low. That's not what we want. So maybe the 150-day is a bit better. So this moving average is a bit further away from the price. It doesn't have these fake outs. But then we also see how we tend to exit a bit later when the trend turns around, right? Here we're exiting at this point. If we have the 100-day simple moving average, we're already exiting over here, which we want, right? We want to exit as early as possible whenever we turn around. But we don't want the fake outs. So if you ride those waves, what duration should we take? What moving average duration is the best to time Stellar? To ride those waves, to follow the trend, and to not overreact when there's a little blip, but to still be reactive enough when the momentum really shifts around. Now, what a coincidence, I have prepared a backtest here. I have prepared a simulation of buying and selling the XLM token. I do these kinds of backtests regularly on this channel. And this backtest in particular has a pretty long duration. So the data starts in August of 2014 and it goes all the way to today, the 28th of June 2023. And in here we've got a macro that simulates buying and selling according to the moving average duration. So it goes from 1 day, which basically means just looking at yesterday's price, all the way to the 200-day moving average. And we can also backtest here the simple moving average as well as the exponential moving average. We can define a starting capital. So let's just take $1,000. Let's not include any fees because on some centralized exchanges you can trade for free. And let's do both. Let's bet on rising prices whenever the price here is above the moving average, but let's also short. Let's bet on falling prices whenever the price is below the moving average. So let's gain, let's make money whenever the price is bearish. Let's bet on both directions, so we put a 1 here in both cells. And let's then simply start the simulation. Let's iterate over the simple moving average and the exponential moving average and let the macro of that Excel sheet do its magic. It's now basically doing 200 simulations for the SMA, 200 simulations for the EMA, 400 backtests 400 times trading across all of this period with those moving averages. And that's then how we can optimize the duration. So let's have a look. It does take a bit of time. And now after roughly 30 seconds, we've got the result. We know how much per annum would have the trading given us according to the simple moving average and according to the exponential moving average. And let's plot this on a chart. There we go. Here we've got a chart. So on the x-axis, we've got the duration of the moving average. On the y-axis, we've got the annualized return. And what we see here is that the 14-day and the 12-day simple moving average tends to work pretty well. The 12-day is even slightly better. It would have given us annualized 205% per annum. Now let's plot this. So let's put the 12-day simple moving average here and let's look at how this actually in a chart turns out. This is the XLM price in white and the back-tested return is in turquoise. This is a linear scale, so we can barely see what happened here in the early days. Let's look at this on a logarithmic scale. And this is what we are getting. We see how the strategy doesn't really work that well when there is not a lot of movement, right? When Stellar simply just goes sideways. And that makes a lot of sense because when it goes sideways, then we tend to be buying in whenever we already shot above the moving average, and we tend to sell when we are low. So we buy high, we sell low, we buy high, we sell low. So those sideways trading ranges are really dangerous for the strategy. And this leads to quite a bit of an underperformance in the early days. But what we then see is as time moves on, as time becomes more momentum driven, that the outperformance is pretty constant. So we see outperformance since 2017. So only in the very early days did this not work. Now the 12-day simple moving average seems to be doing fine, very fine actually. So let's plot this. Let's look at the 12-day simple moving average. So we enter 12 over here, we look at this right now, and this is what we get. Now there's a bit of a problem here, right? We get so many signals here. We go above and below and above and below. And so really you have to trade this very aggressively. The backtest only looks at the price at the end of the day. So UTC midnight. It doesn't trade when the price goes above or below the moving average within the day. So only once per day at maximum are we trading. But still many signals here. So I don't really like this unless you have automated this and you automatically trade this with a bot. This is not super useful. So we could take a longer duration and get less signals and simply just write those trends. So it looks like that's over here, right? The 40-something moving average, 46. So let's also plot that. So I copy paste this moving average. I change the duration to 46 and let's also change the color maybe to red. Then we've got something that doesn't always get crossed that often. The overall performance isn't that great annualized, but still 141% per annum is not bad. Let's plot this 46 days. That's the chart. And here we can already see how the sideways trading range isn't hurting us that much. Right? The underperformance in the early days is way less. So this seems to be, even though the performance itself is lower, it seems to be a more stable approach of trading Stellar. So let's not draw the short-term moving average. Let's take the longer term only. And this is how we would sell over here, not be in Stellar or even bet on falling prices, while we're going down by 50%. Just to then basically buy back in again, get double the amount of tokens. And sometimes still you got these failed signals, but this is why we need these back tests, right? In order to really determine what's best. Eyeballing this and just randomly guessing this is probably not that great. And the outperformance historically is very nice. Here on this logarithmic chart, each of those horizontal lines is a 10x. So when we look at the delta between just buying and holding Stellar and trading this actively according to the 46-day, we have more than a 10x from one another. So buying and holding would have given us 51% annualized, trading according to that moving average 142%. How much more is this in X's? 50 times. You have 50 times more capital if you don't just buy and hold, if you actually follow a strategy like this. Very impressive results, but not unique to Stellar. This can actually be observed for many cryptocurrencies. Trading according to the moving averages tends to outperform just buying and holding. Now, this is one of many backtests I've done over the years. Backtests on different trading approaches, back tests on different assets. And that's, I think, what makes this channel different from others. We only use approaches that historically worked well. And even though past performance is no guarantee for future performance, I think it's the next best thing that we have. We simply work with the assumption that psychology doesn't change too much over time. When people are down 80%, they're likely going to react very similar, no matter if this was in 2016 or in 2019 or in 2022. If an altcoin suddenly has a spike in attention, does it make sense to buy? And if yes, under what circumstances? Those kinds of structures don't necessarily change with time. And so we've done all kinds of backtests, and you can download all of those Excel sheets for the different backtests in the premium membership. There are also tutorials specifically for backtesting. How to build such a sheet, how to change such a sheet. All of this is very valuable content, and it is a proven approach that helps to ride those positive waves whenever we are in a bull market, and that helps to protect us whenever we are crashing down. Now, there's more information around the premium membership at thebitcoinstrader.com, a dedicated video on this. And the price isn't that cheap. It's $75 per month. But here's the deal. If you are not happy with the content, if you're not happy with the support in the Telegram channels, if you don't think that you get enough alpha out of this content, then simply message me in the very first week and I'll refund you 100%. So there's zero risk for you. Most people that sign up, they stay signed up because they get more money out of it than they spend. But feel free to simply just try it out yourself. You can watch all the videos, you can download all the Excel sheets. The reason why most people stay subscribed is because of the community. It's because the trading opportunities we share with one another, and it's those opportunities and the timing of those opportunities that make us win over the long run. So check it out. It's thebitcoinstrader.com, 100% risk-free for you. I don't know a reason why you wouldn't try it out.